That's right. I've introduced artificial intelligence into the management of my portfolio with the help of a professional by the name of Stephen Kress. I'm going to introduce you to him, and he's going to explain to you how artificial intelligence can help you manage your portfolio. I'm going to then bring Mark Willett into it as well, and by the end of this month, he's going to be managing it on a technological basis. We've got this down. I got the financials, Stephen's got the artificial intelligence, and Mark's got the technicals. This is not financial advice. This is cutting edge.
Best of Us Investors presents Kerry Griegmeyer.
Stephen, I'm so glad that you agreed to meet with me today. And as I understand it, you've just launched an article about AI stocks. You screened 147 of them, and you've come up with your 10 best picks. Okay, I've done something similar. I've got it down to 27, but I'm really interested in, first of all, how did you come up with these 10 best picks, and what methodology do you use to give you your quant program on Seeking Alpha?
Well, Kerry, first I want to thank you for having me today. It's a pleasure, as always, to speak with you, and I truly appreciate being on your channel. So to answer your question, although I have devised a quant model, which at its core foundation may be perceived as artificial intelligence, in order to examine these stocks, I am not an expert on AI stocks per se. However, there are a number of ETF managers who solely invest in AI stocks that are experts. So the way that I created my universe was I went to the 4 largest AI ETFs, and I downloaded the ticker symbols for all 4 ETFs, which gave me a universe of 147 AI stocks. At that point, I loaded the AI stocks up into my portfolio tool that we have at Seeking Alpha, and I was able to rank all 147 based on my quant model. The essence of the quant model is, if you're familiar with a GARP type investment style, which is growth at a reasonable price. It really is a system that assesses value, growth, profitability, momentum, and analyst estimates, particularly their upward or downward earnings revisions with the estimates. So those are the 5 core factors that I look at from a quant perspective, whether I'm looking at AI or cybersecurity or automotive stocks or utility stocks. Those are the 5 factors that are most important to me. And I've been doing this for quite a long time. Just by way of background, I used to run a major prop desk at Morgan Stanley. I was there for about 14 years. I also had a hedge fund, which was focused in quantitative strategies, as well as creating a fintech company, which devised probably one of the first robo-analyst systems out there, which Seeking Alpha purchased. So the essence of the model has been tweaked over time, but what I've really found is just these 5 fundamental investment factors, being value, growth, profitability, momentum, and earnings revisions, are highly important. And what we try to do when we assess a universe of stocks, and we cover about 5,000 stocks in our quant system, we are taking each company and we're comparing it to its sector. And when we make those comparisons, we look at the cash flow, we look at the balance sheet, we look at the income statement, and we look at well over 100 financial metrics. And we score each of those metrics for the company relative to its sector. So when you're on our platform, we actually have a very user-friendly look. You could look at value, growth, or profitability, and you can even look at the underlying metrics. So within value, you could look at PE or price to book or price to sales, and actually see an academic letter grade, which scores at A through F, and you could instantly see how that metric compares to the rest of the sector. So if you're looking at value, you can see if it's undervalued or overvalued. If you're looking at revenue growth or earnings growth or EBITDA growth, you can see if it's strong versus the sector or weak versus the sector. And what we do is we score all those underlying metrics to come up with a directional recommendation, which would be a strong buy or sell, and we rank the companies simultaneously. Within the context of that, very interested in AI. It's obviously having a huge impact on the world. So I wanted to assess the AI companies that were publicly traded, and I went to the 4 large ETFs that were out there and basically downloaded their universe of stocks into my system, and I scored all of them. And
I want to clarify something. You have used the word "we," I think, 15 times. Okay. And so I envision a room of 15 people and you're scoring all these things, but that's not it, is it? We is artificial intelligence.
But there are definitely individuals on the quant team at
Okay.
SMCI. So we maintain our quant system constantly, but it is the quant system. It is a systematic process. There's no involvement, from me or any of my
No
colleagues.
judgment.
No, on a day-to-day basis. It's really the quant system
Okay.
that is a data-driven process, and it's simply scoring the metrics for all 5,000 companies that we cover against the competitors, and it's ranked. And within the context of that, we're able to create universes for, say, AI or cybersecurity or drone or water utilities, or we just look at the GIC sectors and we rank all the stocks in the GIC sector or the underlying industry. So if you owned an IT stock or if you owned an automotive stock, you would be able to see right away where that stock ranks compared to all the competitors.
Okay, let's drill down.
Sure.
Let's drill down these 147 stocks.
All right, let me
to your
share my
portfolio.
screen. So right now you should see the universe of the selected AI stocks. So this is the top 113. Now what I could do, these are the ones that ranked the highest. And if you would like, I could actually show you the entire universe, and I think I'll do that because it's quite simple. So I'm going to click on the universe, and now you see AI and robotics basket. Can you confirm that you see that on top?
I do.
All right. So right now you're looking at 147 of the stocks, which were collected from 4 ETFs, and we have it ranked by the quant ratings. And as you can see, there's not a lot that ranks on the top, but I can tell you, and I'll just scroll down. Let me make sure that I just do it in order. So you can see here are the top ones. So we go from our strong buys to the buys, and then you'll see there are quite a few that we have.
And a lot of tickers I recognize.
Yeah, so there's just a tremendous amount, and I can even speed down that faster.
Yeah. Okay.
And then we get to the sells. So what I'd like to highlight, when we demonstrate the strength of the system, if I were to just take the 17 top stocks that we have here and measure it against the 17 stocks that have sells on it, just in the last month alone, over the last 4 weeks, the 17 strong buys are up 6.5%, while the 17 strong sells are down 14%. So I think that really speaks to the quality of the quant system that we use and its ability to separate the strong from the weak. And what we say is strong, obviously over the last 4 weeks, it's had far superior performance compared to the stocks where we've had a strong sell.
Okay. All right.
Let me pause there, and I'll just see if you have any other questions.
Okay, so I just want to run that by you or clarify. You're saying how did you compare the last 4 weeks of strong sells and strong buys?
So
how did you
click away, one click away. You'll see here on this sort of sub-navigational bar, we have ratings, upgrades, downgrades.
Okay, yes.
Valuation. I'm going to click on performance.
Okay.
And then you can see the 1 month performance here.
Okay, and you've got 6 months all the way out to
we do, and year to date.
5 year.
Yeah. And you can see we have this ranked right now in order of our strong buys in descending order. So you can see the top stocks year to date. That is up 157%. Super microcomputer, SMCI, I actually wrote an article in January. This was my top pick for the year. And the
Mine too.
Really? That's fantastic.
Oh yeah, I followed this guy. He and Nvidia's CEOs are good friends, and this is my top pick too.
Yeah, so it's done wonderful. And then you can see Uber's up there, Salesforce. They've had a really great performance year to date. And over the last 6 months and 1 month. And your question was, how do I know in the last month? So all we did was we took the average of the top 17. And then let me go back to the summary page here. And I'm going to reverse the quant ratings.
I see. Okay.
So I can simply click on the quant ratings there. And when I click on it, you're going to see the sells.
Okay.
And then when I click on the performance, you're going to see how poorly the strong sells have done.
Okay. Okay.
So this is our quant system saying, what's a strong buy, what's a strong sell, based on the core methodology that we have of looking at value and growth and profitability, and comparing a company's metrics to its sector and taking those scores. And that's how we derive what is a strong stock and what is a weak stock, or what's a strong buy or buy versus what's a sell or a strong sell. And you can see the systems work very well. And the performance is here to validate it.
Okay. All right. So, okay, let's go back to your strong buys.
Okay. So what I'll do is
No, I have a question here.
sure.
I like you, like Supermicro computer. They're building 3 new plants to keep up with the demand.
Yep.
But they're up. I think for the year to date or year over year, they're up almost 400%. Okay. How can you tell me where to buy in on that stock?
Okay, so on the valuation grade,
Okay.
the valuation grade, all the grades basically run A+ through F.
Okay.
We basically can have a strong buy in a stock that has a valuation grade of a D. If it were to drop below a D, the stock would automatically go to a hold. So your growth, profitability, momentum, EPS revisions could be, as it is with SMCI, it's straight A's with the exception of that valuation grade, which is a C-. Now, there are obviously a lot of valuation metrics that make up that overall grade. So all I'm going to do is click on it, and you'll quickly be able to see. So the grades are not equal weighted, and that's why when you're looking at this valuation grade, you see C-. However, you can see there are a lot of metrics here that are quite green. You see the GAAP PE trailing is a C+, but the forward is a B+. For non-GAAP, for GAAP, it's a B- and B+. More importantly, my favorite ratio, which is the PEG ratio, which is sort of a marriage or a blend of PE and growth. To me, it's one of the most important valuation metrics. That stands out at A. What really weighs it down is that price to book trailing at a D. So when you take that D along with the C's, it's giving it a valuation grade of a C-, but it's still a strong buy. If it were to drop down to D-, it would automatically go to hold. But in terms of you're concerned about value and the fact that the stock has moved up, this stock on a forward PE basis is only trading at 16 times. It's actually at a 26% discount to the sector. So, a stock can go up 100%, it could go up 1,000%. The valuation of the stock is still lower than the sector. In my opinion, it's still a buy. So you can't judge a stock because it's made a tremendous move. You have to look at the valuation framework. There are many people who say to me, how can you buy stocks when they're at a 52-week high?
Yeah.
There are a number of research studies. The empirical data is quite clear. Okay. Buying a stock at a 52-week high has no relevance to the valuation of the company. You have to look at the earnings, you have to look at the price. And empirical data will also show you, if you were to take a basket of 10 stocks trading at a 52-week high versus a basket trading at its 52-week low, you would be in far better shape buying the stocks that are at a 52-week high. And the reason
don't bet on the loser in the horse race.
Right. Why would you want to do that?
Now, I am anticipating my audience is saying, show me Nvidia.
Sure.
Everybody says it's way overblown. Show me Nvidia.
We will do that. Okay. So I'm just typing in Nvidia right there. I don't even have to put the full name in, but I'm going to click on it. And I want to bring you to the summary page first.
Okay.
So we could take a look at where the ratings are. So it looks like the contributors to Seeking Alpha, the consensus is a hold. Wall Street is a strong buy in the stock, and the Quant is a hold. Now, I find Nvidia is pretty interesting, and you can see there's straight A's for this stock, with the exception of valuation, which comes through as an F. And as I mentioned before, if it's a D- or lower, the stock will automatically be rated a hold, because it just, in many cases, is too expensive. But what I'm going to do is I'm going to click on the valuation, and this is where it's really up to the individual to make the decision if they want to buy the stock or not. So you can see literally that there's a sea of red here in terms of all the valuation metrics. The trailing PE is 86 times. It's incredibly expensive. The forward PE is at 42 times. It's an 88% premium to the sector. If you look at it a gap, the multiple's over 100 times for trailing. So very, very expensive on PE. If you look at EV to sales, very expensive. If you look at price to sales, it's an F. If you look at price to book, it's an F. Price to cash flow is a D minus. But there is my favorite valuation metric, which is a B, and that's the PEG. Now, as I said, it's not equal weighted when we're looking at the valuation factors. Some metrics do have greater predictability than others, and we put a heavier weight on the metrics that do have greater predictability. Having said that, even with the PEG being a B, all the other metrics wash it out because they're so deep in the red. But if this is a stock that you like, and you're looking at the quant system, you could argue on a PEG basis, when you do marry the PE and the growth rate, it's actually quite attractive at 1.27 times versus the sector at 1.75. So it's about a 27% discount to the sector on a PEG basis. So even though the quant system has a hold on it, if you find that this is an interesting story, I encourage people to go into the factor grades, look at the underlying metrics, and make the decision. So, you could say, I could really make a buy case for the stock. However, I'm sticking with the quant. And it did rate as a hold. So this was definitely in our universe of 147 stocks. And there were other stocks that ranked higher. But you still can make the decision on your own. This is the godfather of AI stocks. They really sort of kicked it off with the strength that they had in their quarterly results a few quarters ago that took everybody by surprise. And when the CEO spoke about it and attributed it, to AI, the light bulb started going off everywhere. And the wonderful thing about AI is you don't have to be a mega tech company to utilize AI. And I had 10 stocks, but I actually provided 13. I'm going to go back to this. And you can see part of the quant scores were for Caterpillar.
I saw that.
Deere and Emerson Electric. Okay. Especially Caterpillar and Deere. People don't really think of these as technology companies, but AI has had such a big impact on these companies that they were included in most of these ETFs that focus on AI.
Explain that to me. Explain that to me. Why would they show up in a AI ETF?
Well, when you think of a company like Tesla, individuals have no problem thinking of that as an AI company because of their autonomous vehicles. Heavy equipment now is really very, very similar, especially farming equipment. Much of it is autonomous. And they were probably building out a lot of the software even before Tesla was doing it. So people are quite familiar, especially, if you're outside of any major city and you're in rural areas or even sub-rural areas where there's farming going on and they're using large equipment, so much of it has software that's involved.
You just rang to I remember reading an article or I think I saw something on this where a tractor now has facial recognition software on it. So as it's going down the rows, it identifies what's the crop, what's the weed, what's the bug, and then it has, through facial recognition, it has the ability to deliver the fertilizer, the bug killer, and the weed killer as they go down the field. And then there's nobody driving the tractor.
Yeah, I mean the tractor basically uses a GPS and AI. So that's why companies like Caterpillar and Deere are in the ETF universes.
I have coined a phrase that, in fact, I have it hanging on my wall. Investing in the stock market has become a team sport. Okay?
Yeah.
I'd like to invite you to become a part of our team.
I'm happy to join.
And I think that's the beauty of what the digital revolution has done. It took my father, who used to go down to a broker and talk to a broker, and they watched the ticker table, and it was basically he and the guy. Okay. Now through the digital revolution, we've been able to gather knowledge from other people. But now through artificial intelligence, we've leveled the playing field, and now we can be as good as the hedge fund or as BlackRock or whoever by coming together as a team.
Yeah, and honestly, that speaks to the quant model that I had built out. I used to go down with my grandfather there would be a large branch office for, I'm not even sure what brokerage firm he used to take me into, but I was probably like, 6 or 7 years old. And he used to take me.
Merrill Lynch, probably.
It could have been. It could have been. And that's probably where my interest started in stocks. And then as soon as I graduated from college, I went to work for Prudential Base, which is now Wachovia, and I worked in the research department. But really, in essence, what you see at Renaissance or Bridgewater, which are some of the biggest hedge funds, I eventually had built out a prop desk at Morgan Stanley that focused in quantitative strategies. And then eventually, when I created a fintech company, really part of the goal was like level the playing field. So, any individual, whether it was somebody being my mother or a portfolio manager at a mid-sized company, would have the same resources to use the technology of computer processing and assessing a lot of data for thousands and thousands of companies on the common metrics that are used by fundamental analysts.
This is wonderful. I'm so glad you opened this up to me. I have this same sidebar on mine, but I've never dug this deep into it, and I really want. Okay, let's assume I'm sold. How do I become a part of this team with Seeking Alpha?
And I believe the people that go through you will be able to get a trial at it as well.
Right, so, they do. In fact, there's a link in the description of this video that will take you exactly to that. So you get a discount and a look. But what I want to say is, Stephen, this has been eye-opening. Again, I'm serious. I want you to become a part of our team, and I want you to become a regular here, because I think a lot of people are like me. I've been in it. I understand it. I understand the financials. I'm learning more about the technicals. But what you've got is something that has brought that all together. And it, again, it doesn't tell you what to buy, and it doesn't tell you what to sell. What it tells you is where to get more information and how to make a better informed decision.
It does, but we do say strong buy or strong sell based on how that data compares. And people do have the ability to load up quite easily their portfolio holdings and see how the stocks are rated. So it does.
And to my viewers, that's what Stephen did. That's what I have done. You can actually go in and load up a portfolio like what he just showed you of your stocks, and it automatically gives you a quant rating of them. Then what you can also do is request that they send you an email of whatever happens on that stock today, tomorrow morning, so that you know exactly what is happening. And the beauty of this email is you get a summary. You read the summary, and if you want to go read the whole story, you click and you go. And it will keep you informed of whatever is happening in the stocks in your portfolio. You have no excuse from that point on.
Well, Kerry, I want to thank you for having me on today. I really appreciate it. And feel free to invite me back anytime.